All right, welcome everyone. This is Bob Maurer. It is about 7:30 p.m. my time on Tuesday, June 10. I want to do an introduction of several new strategies. It's been a bit of time, a couple weeks since I've last posted the strategies. A couple of reasons. One is did a bit of a crop tour. I like to get out and actually get my own boots on the ground in terms of looking at the crops and how they're developing. So I did a road trip basically from Northeast Illinois through Iowa on I-80 and then through Nebraska, same interstate. Then worked my way through Northeast Colorado down to Denver, through the mountains and into Utah. And I like to do that because it actually lets me see what's actually happening out there. I do a lot of reading, of a lot of analysis every single day, particularly with the grains, oilseeds, and livestock, and also cotton. And it's nice to actually get out there. And when I do have a chance, maybe meet with some customers on the way if they happen to be available. So that was part of the reason. The other was I didn't see a whole lot setting up, but now I do see things setting up. So I'm going to go ahead and publish that. So that's where we are at the moment. So let's hop into the portal here. You'll see the most current PDF version right here. So this is for the week of June 8th. And this is what we're dealing with. So we're all new. So we got top line 359 bull spread cattle. Second line is 360 bear spread soybeans. Middle is 361 bear spread rice. 362 is bull spread wheat. 363 is bear spread OJ. You'll see two entry levels now on a few of these. And the reason for that is we got three entry levels. So for the more aggressive average in traders, the top two are going to be in play plus the bottom one. And then for the more conservative regular entry traders, it'll just be that bottom number, which is usually farther away from the benchmark. Okay. One note here is this rice shows negative 14.5. There's only two entry levels. It's negative 12.5 and negative 8.5. So bear that in mind. I'll get that corrected. Okay, so that is where we're at with all these. Also, one other note 361, the bear spread in rice, and 363, the bear spread in OJ. These are not the most liquid markets. So, if that's something you like to avoid, you might want to avoid doing particular spreads. If you're okay with the risk, then proceed. Okay, so let's hop on over into the charts and see how things look. I'm going to do a brief introduction here, just kind of go over the high level approach, and then I will try to post the more detailed why tomorrow. All right, first one first. Strategy number 359, bull spread cattle, long Feb, short April, margin requirements on the PDF. And then we got our risk rewards. And then we've got three entry levels. So we've got the benchmark 140. That is our first entry level. Then we've got entry level 2, which is 110, and entry level 3, which is 90. Stop down there at 20, and then we got our targets up top. This market's been on a nice little uptrend since about April, pretty much a pretty good move, steadily higher. So we are going to go with the trend on this. This is trend following, but we're looking for a bit of a break. See a break to the downside, fill us up, and then have a rally back up to the upside here. That is bull spread strategy number 359 in live cattle, the deferred contracts, Feb and April of next year. Okay, then we've got beer spread soybeans. Strategy number 360, long November, short September. This is the same marketing year, so we're good there. Check the margin requirement on the PDF. Then we got our risk reward dollar values. What are we looking to do here? Well, we're looking to get in at the benchmark at negative 7.5. Then we've got entry level 2 at negative 6.5, entry level 3 at negative 6, stop is at negative 4. Then we got our targets to the downside. Converse to the live cattle, this one has been breaking since April. Pretty much bottomed out last week, June 3, got a bit of a bounce. This is going to be a trend following seasonal tendency. Seasonal tendency is in the driver's seat. We're trying to get on board with the general trend. We want this thing to rally a bit more, let us get filled, and then break on down. Pretty short window of opportunity, only 17 calendar days. And there's a holiday in there too. Juneteenth is a holiday, and then we got a couple weekends. So 5 of those days are probably going to get chewed up just from holidays and weekends. So that's that. Number 360, bear spread soybeans. Okay, here's one of those illiquid ones. This is strategy number 361, bear spread in rough rice. Margin requirement on the PDF. And we have 2 entry levels, negative 12 half, negative 8 half, stop at negative 5. Targets are down below here. As you can see, pretty much the bulk of this trade has been sideways for a number of months, somewhere in the neck of, say, negative 8 or so to negative 18 and a half. So this is a range bound trade and aligns with the seasonal tendency. This thing goes all the way to August 10, but I doubt, could be wrong, but I doubt it's going to take that long to either be proven right or wrong in this seasonal. All right, so that's bear spread number 361 in rough rice, the Novi versus the September. Next up, bull spread in wheat, strategy number 362. Risk reward dollar value is here. We've got 3 entry levels on this one. So we've got negative 42 where it was benchmarked the other day, negative 43, and then negative 44 half, stop down at negative 47 quarter. Then we got our targets up top. As you can see recently, the range has been about negative 45 up to about negative 39. So similar to the one we just looked at with the rough rice, this is a range bound trade. There's really no trend of late. We just wanted to stay within the range. First, let us get on board, then pop. So we need to revisit the downside and then have it pop back up to the upside. All right. So that is strategy number 362 in soft red winter wheat, the Chicago variety. And then we've got, last but not least, OJ. So this is strategy number 363, bear spread in OJ and long Nov, short SEP. Again, this is not the most liquid contract, so bear that in mind. We've got 3 entry levels on this one. Looking to get short. So benchmarked at 250. That's the first entry level. Then we got 330 and 485 with a stop at 670. And this one has been drifting higher. Okay, basically drifting higher. Almost range bound. So we just want this thing to retest the highs and break on down. I wouldn't really say we're counter trend because it hasn't really been a buoyant market. It's been upward, but not crazily. And it's more sideways. So I'm going to say this more of a range bound trade that aligns with the seasonal. All right, so this is strategy number 363, bear spread in orange juice, 3 entry levels. And again, it's trader's prerogative. So if you're not comfortable with getting in at the benchmark, then you can always just reset and get in with a 1 lot at level 2 and a 1 lot at level 3. Right? If you're not just a standard, straight up, more conservative trader. So you can play around with it the way you would like, but that's where I see the entry levels working out the best. All right, so that is that. 5 new strategies, been a bit of a break. We're going to get active now, and we'll see how things go. If you have any questions, comments, anything of interest, feel free to reach out to me. I am going to leave it there, and thanks so much for watching.